5/18/2020, we have a Netflix NFLX that had made 52-week highs. We had this big, what we started with, we called the left elbow gap down. That means in our terminology, going down in value. As the diamonds proceeded to go lower from and closing below previous half bars, slide the bid. That's a sell wick. Slide the bid. Then we start getting a little volatility, but you never move in on that first pass because the minute that you get a red bar next to it, we made the lows, and the IR did hit here on a clock at about 45. So once again, the 440 calls, which were in the money, came into play, and selling up here where the IR and Panther was at 99, the 440 calls and that left elbow gap down with ascending diamonds in value are ascending, going higher till we hit the top, and we filled it in. And if you don't sell up here, then you don't get paid. Maybe Netflix wants to go higher. But when you're dealing with a small amount of contracts, if you're doing 3 or 5 or 2 or whatever, you sell into it up here always. And yes, it's at a 85. It's $1.09. Knowing when to get paid, knowing that in pre-market we look for stocks that are going down on the open and they hit the bottom and they're going to burn the clutch and they're going to hit first, second, third, and fourth gear. And this is how it's hitting. Those RPMs are hitting awfully high. So the pullback is at 85 in the exit. Small amount of contracts would just take out the money. Rather, Netflix may or may not want to go higher, selling at the high of the contract, of the value.